What's up, guys? So today I'm going to go over a weekly outlook of what we can expect to happen for this upcoming week. Last week's weekly outlook played out pretty perfect on almost every asset. The only thing was Nasdaq came short about 60 points of the target that we gave for the week. So let's get into it. First and foremost, we just finished day 7 of our uptrend as of Friday. Oh, nope, day 8 as of Friday. I didn't update it. 8/23, 2024, day 8. And so we are on day 8 of our uptrend, and we've seen the stress test days as we kind of expected. Stress test days on day 5 and day 7, similar to what I was showing in the video that I just released for this trend journal. And so we are on day 8, and we're expecting to kind of continue higher. There's no reason not to. And so let's get into the charts here. We're above our 50-day moving average. We barely broke below it on Thursday. Closed a week above it though, and that's kind of a key. And then we are also still above our 21-day moving average like we want to be for a uptrend that we're looking for. I would love to see for this upcoming week a possible test of this 21-day moving average and then hold it and then bounce up and continue higher. The Nasdaq doesn't quite look as good as the S&P 500 in my opinion, but it does still have a good look to it. There's absolutely nothing wrong with it in any way. We are still showing bullish order flow. We took this high, so that means we could come into some sort of internal liquidity and then look to go for external liquidity again. We are just about to finish the month of August, and the monthly candle is absolutely incredible for an upside reversal. We undercut 3 months worth of data, 3 months worth of data until May lows, even took out February lows. And then we're bouncing, closing towards the high of the month. And so that's really important in showing how strong and resilient this market is right now. We also, just like I mentioned last week, created a weekly fair value gap like we wanted to do after inverting this weekly fair value gap as well, this lower one. So we inverted this one here and created a larger fair value gap here. And that's showing that we are in more of a bullish scenario here. So nothing wrong with NASDAQ at all. The main key, in my opinion, is going to see where we react off of these highs, this level right here. So this high and this low from Thursday, that was an outside candle. So that high and the low, and then the next day was an inside day. That's probably going to get taken out in some sort of way. And then if we undercut it and then bounce really strong and invert fair value gaps on the way up, we'll look to come back to the high of the range and or continue higher. And if not, we pull back, we want to see it hold somewhere in this level, this like 19,200 level, and this 4-hour fair value gap here, and that would be make sure that it holds this bullish order flow as well. So next, with the ES, it's very similar, but except my opinion on a daily chart, looked a little stronger and same on a weekly. The weekly closed pretty much at the highs and is showing almost just looking like it wants to magnet to all-time highs here. There's absolutely nothing wrong with it. We created a great fair value gap on the weekly chart, inverted this fair value gap, and we inverted a bunch of fair value gaps on the daily already. So unlike the Nasdaq, we did not invert this fair value gap from the 19th. We just held it and now are bouncing from it. So that's showing bullish order flow here as well. Just like the Nasdaq as well, I do want to see a strong push above these highs and or a sweep below the lows. And then as it does that, we'll look to continue higher. For gold, same thing essentially as what we wanted. We came up above the highs and then really just had a consolidation week. That is perfectly fine, but we are still respecting all order flow that we needed to. Came above the highs, came into this fair value gap, respected this fair value gap, and now is trying to push above. So again, if we can get above Thursday and Friday's highs and get a good push, we'll hit all-time highs on gold as well. USD JPY is very, very weak right now, similar to the dollar, where the dollar has had something that I'm going to go over next that we haven't seen in a long time. And when we do see it, we tend to see the market run. And so USD JPY, low hanging fruit, a couple targets, this 140.06 and 41.62. If the dollar stays weak, this is going to continue lower. And then the dollar. This is kind of one of the more important assets that I'm looking at right now because of the 200 EMA on the weekly chart. We've been talking about this in chat and in Playbit a lot, that this is the first time we broke below the 200 EMA since July 2022. And we have only broken below it a few times, 2017, 2010, and then also in 2003 or 2001 as well. So if we overlay this with the S&P 500, go to your plus sign and then SPX, and you want to do it on a new price scale, not on the same price scale, or else it's going to be all wonky and look weird. Do a logarithmic chart for your S&P, and then bring it up to the top. Bring your DXY to the bottom, and now we got a good comparison chart here for the DXY and the NASDAQ 100, or in the S&P 500, sorry. So if we just go to every time that the highlighter, every time that the DXY has gone below the 200 EMA right here, that matches up with right here. So we see a good push after that. Same with right here, matches with right here, a nice push after that. And then if we continue going back in time, we're seeing that anytime that this 200 EMA gets below, we're seeing a push in the S&P 500. So I'd love to see something like that happen as well. Again, right here, back in 1985, we had to see a breakdown in the 200 EMA, and then notice we have this huge run in the in the S&P 500 as well. So this is a very bullish scenario for stocks, very bullish scenario for any sort of asset, the euro, the GBP, gold, crypto. This is very important and very something that we could look for to continue higher movements in the assets. I first kind of targets that I'll be looking for DXY, very simple low hanging fruit would this be this 99, and then under that you're really looking for this 94 level right here. And bullish or bearish DXY would bring for a bullish euro. So easy low hanging fruit is this high at 1.12698 right here from July 2023. And then above that, the next level you're looking for is 1.15 from the high of February 2022. So pretty easy levels and targets on the euro. Same situation. We're breaking above the 200 EMA on the weekly chart for the first time in a long time. And this is a long-term moving average that helps determine the trend in a very long-term sense. Similar to the euro, we do kind of have an SMT. The GBP has already taken out this high, but it's displacing above that high. Let me clean up this chart a little bit. The GBP above its 200 EMA and has gotten above it and used it as support now, and now pushing above it and creating fair value gaps as it comes above. And so therefore, this is confirming that it is looking bullish and most likely coming to this 1.374 level from 2020, January 2022. So big moves looking like they could come happening in the currencies right now. I would probably be trading GBP. It looks a lot cleaner and looks like it has a lot more room to run than the euro. Next, the SMH. The semiconductors, when the market tends to be in a great big bullish market, semiconductors tend to be the leaders. And that's what you want to see happen. You want to see semiconductors be the leaders of the market. And so on a weekly chart, we did invert this fair value gap, and I want to see it start inverting this other fair value gap right up here into the upside. We could see some sort of resistance there. We are coming into a a seasonally bearish section, so we want to be just cautious and mindful of that. It doesn't show that we are doing anything based off of it until we get a trend and a determination that we are bearish again. So just being mindful about the seasonality, but not using it as any sort of action or trigger. And then the the SMH, I do want to see it get above your 50-day moving average. We barely tapped that and then got rejected. So it could do something similar to this, form a lower high and then, or form a higher low and then get a good push above it. And that would be kind of a best case scenario. So come down somewhere in this 235 level and then form a higher low and then continue its push here. One other thing that I want to show is this market breadth here. So if we go over the market breadth, whenever we see a rise, what this is the net highs versus net lows. The amount of stocks making new net highs versus the amount of stocks making new net lows. When you see more stocks making new net highs, then you tend to be bullish more in a sense. So right here, as we were first getting above this 50 MA earlier on in May 2024, we were making new net highs similar to what we are doing now. So that adds an extra bullish confluence to kind of the scenario that we are looking to go higher. I do want to see a little heavier volume to the upside, but that's kind of just we're in the summer, so we do get that kind of that summer volume. And notice here back in 2023, making new net highs, continuing as we are getting pullbacks, making new net highs, 52-week highs as we're getting pullbacks. That shows kind of confirmation we are looking to continue higher. So that's what I got for the market outlook for this week. I am looking to continue higher. We don't have a ton of news. We have, so next week, let's go over it real quick. I don't think there's hardly any we really need to be worried about until Thursday. So Monday, there is durable goods and month over month. I don't think it'll do too much. House price index at 9 a.m. Eastern. That won't do too much in my opinion. Consumer confidence at 10. That might give a good push, but nothing that's going to have any crazy wicks. Wednesday, I don't think we have anything at all. NBA mortgage, that's not going to do anything. Some oil stuff. So if you're an oil trader, that will. I'm not an oil trader. I hate trading oil. And then Thursday, we have the big news. This is the day to kind of be watching for news this week. Will be Thursday. So we have jobless claims, we have GDP, we have good trades, we have an PCE, and we have and wholesale inventory. So a fuckload of data coming in on Thursday. So we could definitely see some sort of consolidation or sideways movement or slight pullbacks Monday, Tuesday, and then kind of reversal Wednesday, Thursday, Friday to continue higher. So we'll be keeping an eye. We'll be live trading in Playbit every single day this week. So come ahead and join. I appreciate you guys. Enjoy the rest of your week.